Hi everybody, this is Brian Kasal with our FourStar comments for the second quarter of 2017. We've had about 2 months of this Trump presidency, and markets continue to rally since the election, albeit with a recent breather the last 2 or 3 weeks. Markets are rallying primarily on the expectation of lower taxes and higher earnings, as well as stronger job growth. And that's all been happening, of course, since the election and then the inaugural. We've seen a spike. On the other hand, recently we've seen the failure of the administration and the Congress to pass healthcare reform, and just the general chaos of the Trump style of leadership puts a lot of people on edge. So from our perspective, however, we're seeing lots of promises made, some kept, a blizzard of executive orders, and then questions about Russian ties and all series of things that seem to dog the president and his administration. So I guess we're in a wait-and-see mode to see how things shake out. Politics, of course, is brutal and has consumed many people here, but our concern is purely and primarily how it affects our investments and our clients' ability to achieve their plans using their investment program. So the third and final revision of the fourth quarter of earnings was revised upward to 2.1% from 2.0%, 2%, slightly ahead of expected. And the market, we don't think, is terribly expensive when you consider other alternatives that are out there, considering what those alternatives are. International stocks are cheap as well, and they could be beginning a major move up here. The recent moves in technology stocks, semiconductor stocks, infrastructure stocks, metals, non-ferrous, including steel, construction, and general construction, leisure time companies, and financials due to wider profit spreads. We don't see too many expectation of too many changes in sector rotation in the near term. Looks like these trends are established, at least for the near term. Earnings are good, trends are good. So unless there's some big news that we can't see right now, we expect to see similar things in the second quarter than we've seen in the first quarter. Now, we've been in a technical bull market since 2009 at the bottom in March, but yet many consider the birth of this bull market to be 2011, when the markets had a serious crater effect, when America lost its AAA rating. So officially the bull is either 7 years or 9 years in length. It's hard to tell. International stocks we think could lead here, and those are primarily what our comments are here for the first quarter of 2017 as we begin the second quarter of 2017. So for a deeper dive on all these market subjects, be sure to listen to our FourStar podcast series, which records once a month all of our deep and dark and deepest comments about what's happening in the financial markets, and a more rambling series where we can go into a lot more detail. So I look forward to that, and that's available right on our website.